Actually, before we go there, we should speak about the spreads, about the classic trend following. We're kind of like in this small group of like-minded people here together with, Jerry, maybe a Paul Mulvaney. There's like a handful of other people. We jokingly say we're the last, they call us sometimes the Caveman or whatever, people standing doing it that way. We shy away from, dynamic position sizing or vol control trades, or essentially playing around with position adjustment trades once the trade has been initiated. It doesn't make a lot of sense to us. I mean, it does cost commission, it does cost bid offer, it's not for free. And we think that once you have that position, if that position starts performing and it, because of that good performance, develops a, larger footprint in the portfolio, it starts to move the needle. If you rebalance that trade and dynamically adjusted the position size, you're essentially executing a mean reverting profit-taking trade, which has nothing to do. It's the opposite of trend following. So we really don't like that. We'd rather accept the volatility. We don't see volatility as a penalty. It's more like a inconvenience fee that comes along, which we have to accept and absorb and work with in order to make, the big money. We do want to make big returns. We're not here to make 7-8% a year. We want to make 15 to 25 or something like that per year. So we have to work with volatility. It is the natural byproduct of that trading process that we follow, right?
Yeah, it is, exactly. And it's not risk per se, right? Volatility is often set as equal to risk, but volatility is actually something which gives the markets breadth. So it's not only to the downside, it's also to the upside. And that benefits you a lot if you kind of like cut the losers short and let the winners run.
Risk is done through position sizing, or risk is managed primarily at the beginning, at trade inception, through appropriate position sizing. And we size every position essentially in the same way. That doesn't mean that we're trading the same number of contracts for every market, but we're risking the same amount of closed equity or core capital for every bet that we're taking. And then we're doing it over and over and over again on all these many different markets. And most of the time, as I've said, it results in a small loss, or kind of like a zero trade, nothing happens. Every once in a while you have these big moves.
Exactly.